All right, welcome everyone. I'm a bit biased, so I think this is the most exciting panel today. Vaults is a very big theme for this year. Let's maybe start out with some intros. So my name is Soufia. I'm currently heading growth at Mellow, previously head of DeFi at KelpDAO. Martin?
Yes, great to be here. Martin, head of growth at Maple Finance, so responsible for sort of all the partnerships and sales.
Yeah, I'm Charles. I am the DeFi protocol specialist at the EF, and previously have worked with MakerDAO and Element Finance over the past, 8 years at DeFi.
Awesome. Maybe we can start out with a bit of a broad question. So, I mean, we've seen a lot of big funds in the space sort of emerge as curators this year. I'm curious to hear your thoughts on what makes a good asset manager.
Yeah, so I think in asset management, especially at Maple, we all have institutional backgrounds. So most of us come from traditional finance, and of course, over the hundreds of years that has been around, I think ultimately the number one priority should always be capital preservation, just making sure you don't lose money, which really means that you think about sort of all the tail risks and scenarios, everything that could possibly go wrong. And in crypto, turns out there's a lot that can go wrong. There's hacks, there's a lot of price volatility, there's bad actors. So I think, it's really important to be prepared for all of that. And that's why at Maple we take a very conservative approach. And how that works itself out is that, we do very good due diligence on partners, right? We don't just work with anybody. We have, very conservative sort of structuring methods to the way that we do loans, and we manage the assets on chain.
And we'll kind of get into sort of the underbelly as to how you how you guys source good borrowers. But I'm curious. So I've seen a lot of vaults actually vest into syrup vaults. So I think the general perception is that they see that as a safe avenue for yield. What kind of goes on in your pitch when you're sort of pitching these syrup vaults? Would love to kind of get an overview on that.
Yeah, great question. So I think ultimately in DeFi, sort of in the landscape right now, there's a lot of places that are attracting capital, right? So there's a lot of exchanges, earn programs, wallets, lending protocols, vaults in general. But there's actually very little players that are actually generating yield on that, right? That have a real scalable yield source that can take billions of dollars in deposits. And that's sort of what we excel at as Maple. So we see ourselves sort of as the bedrock of actual yield generation. And no matter where the flows are coming from, they ultimately end up in Maple products, right? Because we can generate yield at scale in a way that is actually safe, right? And then properly risk managed. So that is really the core of the pitch. And there's many different ways in which that expresses itself, right? So we're collateral on all the leading lending markets, right? Especially Aave, which is a great partner. So, and there you are collateral, right? And people sort of borrowing against it. And there's also direct integrations, right, where users just allocate it into it directly. And the core strategy is indeed to be an asset, right, to be used on other platforms. So 90+% of our deposits are through partners, right? They're not directly in the Maple UI, which is something we pride ourselves into, and that's actually our strategy, right? So we want to work with others to attract that capital and be that solid bedrock asset that DeFi can rely on.
Yeah, and I mean, you guys had a really great year, right? So over $4 billion in deposits, a big endowment as well from Bitwise. I'm curious to also kind of follow up with how do you guys go about sourcing good borrowers? So what is the profile of a good borrower?
Yeah, so the profile of a good borrower is someone who, if the collateral prices go down, you give them a call and they actually send you more collateral, right? That is really the ideal borrower. So we'll look at their balance sheet, and make sure that whatever collateral they're sending us is not the only collateral they have available, right? So we sort of want to make sure as there's 2 or 3 margin calls, right, if prices really drop, that they can keep sending us collateral, right? Because we ideally don't want to liquidate, right? And neither does the borrower want to be liquidated. So that's really the main thing we look at is balance sheet quality. And then of course we look at overall business model. Does it make sense, right? What are the source of the funds? And a lot of these borrowers, they like to work with Maple because we're institutional, right? We offer qualified custody, we offer fixed rates, we offer term, and there's legal documents, right? So they actually also have a clawback on the collateral, right? So once they repay the loan, they have the legal right to receive the collateral back. Things like that are what makes institutions comfortable, and that's why we've been able to, grow market share sort of in institutional lending, quarter over quarter. And as we grow deposits, we continue growing sort of our market share on the borrowers, and we expect that to continue for many more quarters.
Well done. I think everyone here can also agree that the EF has taken a much more active position within DeFi. So I think there's over like 90K ETH that's been already staked. And then on the lending markets, I think over 60% of that is on Aave. Curious to hear, are you guys, or would you potentially look at using a vault for on-chain asset management? And then maybe just to kind of follow that up on DeFi Punk, would that be your investment thesis?
Yeah, so I mean, I think on the Treasury, it's very limited to DeFi Punk and crops. And for those who haven't seen the recent EF mandate, the crop stands for censorship resistant open source, as in free and secure and privacy first. So yeah, we're prioritizing that from the Treasury side. I think last year the Treasury policy went out and it was very conservative and followed this DeFi Punk rule, which is very akin to crops essentially. But yeah, that means there's kind of this strict requirement on those, and there's plenty of DeFi that is getting there. So on the DeFi team, we're encouraging teams to get to that level of, I guess, immutability, very transparent about risks. And of course, on the Treasury side, the only allocations really have been Aave, Morpho, Spark, Compound, and we're actively doing research to see which DeFi primitives we can do, including vaults. There's also the idea of potentially looking into allocator vaults that take these certain requirements and guardrails and print it on chain and just allocating based on those. So that'd be really exciting.
Yeah, and obviously we're at an event that's sponsored by Aave or hosted by Aave actually. So what do you think makes Aave such a great venue for lending?
I think it's one of the only decentralized DAOs that has been running for the longest time. The way it manages its risk requirements is really impressive. I think when it comes to DeFi, there's protocols that have true immutability, and that means very minimal governance. You can't change requirements, and that's great from the censorship resistant side. Is that nothing can really change here. But then the impressive part when you're not truly immutable is that you have to manage these upgrades, go through migration to those things or offer optionality, and still have users trust your protocol through all those changes. So yeah, I think when you see a protocol managed by a DAO that has constant debates, a healthy amount of political conflicts, it's just really cool to see, because that was totally impossible in TradFi. Think of an entire financial system just managed by the most loyal users and yeah.
I think so. The value that I would attribute to a DAO debate, without naming any specific names, right? We've seen a lot of stablecoin exploits, 3 of them specifically over the last year. None of them were on Aave. So I mean, I like to attribute that to a qualitative conversation as to different qualitative attributes that you wouldn't get by curators just whitelisting stablecoins. Do you sort of have the same feeling about that, or do you have a different take?
I think the area that DeFi can overall mature a little more on is on risk in general. I mean, just a couple years ago, the risk when allocating to something was, does it have a decent amount of TVL, Lindy, no hacks? All right, let's ape in, So I think TradFi has a insane due diligence process, and that includes risk and credit scoring, right? So how do you actually work with S&P and Moody's and Morningstar, or even some on-chain version of that is an improvement or a little more catered to what on-chain finance is, and then apply those scores to these assets and protocols, because it's hard to assume that retail just wants to invest in crypto. Not many people in the real world actually invest all their money into stocks or bonds or whatever. How can you expect them to do that to the on-chain version? So then you're actually targeting these asset managers, right? And what asset managers need is risk scoring and the ability to translate that risk to people who don't really know, to trust that aspect of it. So I think on the maturity of risk, it's coming up with better frameworks that are truly transparent, you understand everything, and risk scoring that can generalize it for people who don't really want to dig in.
Actually, so one thing that I wanted to mention, because you guys had like a ton of exciting news that just literally came out this month. The kind of context behind my question is, like, for example, with Mellow, we're currently curating Lido vaults. So on the curation side, obviously there's many risks. Probably the second risk that, or like the second biggest risk that I can think of is bridging. So I want to hear a bit more about economic zone. Is that sort of like the cure to bridging, or like would you guys see that as a potential solution to mitigate bridging risks within like layer twos?
I mean, to be honest, like that aspect of, I'm more focused on DeFi, so bridging, like, and the risks like implied in it isn't really my territory. But I think it also comes back to transparency, is like who controls like these like bridging flows, and I mean, there's a lot of profit and revenue to be made from those aspects. But like if you can actually create like the decentralized version of that, like everyone benefits and trusts more. Yeah, sorry, I can't elaborate more.
I mean, we can follow up maybe in like 2 weeks or something. But Martin, I mean, I think just kind of going back from my previous remark about stable coins, we're seeing a lot of vaults, or like a vault-to-vault structure where like they're deploying on Maple. So like the yield mainly comes from borrowers at 4.2%. I think what most people are also kind of looking into is sort of like the other side of that is, how do you guys deal in like events of like liquidations, or like how are you guys consistently making lenders whole?
Yes. Yeah, so that's of course our top priority. And the way we do it is really in an institutional way. So instead of, typical lending protocols, you sort of have automated liquidations, once prices hit those levels. And at Maple, it's slightly different. So the way we do it is that we first issue margin calls. So let's say you have a typical Bitcoin-backed loan at 70% initial, and then at 80% LTV, we'll issue a margin call, which is a legal requirement for the borrower to top up collateral. So if they don't do that within 24 hours, we have the right to liquidate. Or if Bitcoin price keeps falling and it hits a 90% LTV. Now, because we work with very high quality borrowers, the average margin call is cured within 2 to 3 hours, which is then more than enough to bring the loan back to healthy levels. And that's really the way we protect capital. So to date, we have had no losses in our secured lending strategies. And in fact, we've had about 200 margin calls, over the years that we've run it. And we only have had 2 liquidations, right? So it really speaks to the quality of the borrowers, and them sort of really topping up collateral in a fast way.
Yeah, that makes sense. I think it's also interesting that like when we see all the layer twos that are today, all the different yield ops, I think like vaults are kind of the solution to go about like receiving yield in a risk-adjusted manner. I think sort of DeFi has matured where it's no longer the 100x return days, but more so like stable yield where you're beating inflation and some more. How do we get the everyday user, or how can we convince the everyday user to kind of deposit on vaults?
Yeah, so I think the thesis at Maple is that this year especially, but in the years to come, the sort of the large fintechs and neobanks, and in general the large players that have tens of millions or hundreds of millions of users, they're all going to be integrating a variety of different DeFi strategies. It could be vaults, lending protocols, whatever you call it exactly, to offer that yield to their users. And we already see this happening right now. So I think in Asia, of course, is typically leading. In Asia, the fintechs are just more the crypto exchanges, right? And they are already offering DeFi yield straight source from DeFi to their users. And we now see this as well in sort of like more traditional fintechs and neobanks. So at Maple, I'm having conversations daily with all these different players across the globe, and they're super interested in this. And the big benefit is that the cost of capital actually is quite low. So traditional sort of retail users are super happy with 4% on their dollars. So I think it's just a massive opportunity to tap into. And of course, we saw Aave last week announce the WAP deal, right, which was sort of one of the first that really came to the market. But I think that's going to happen a lot more over the next few months.
Yeah, I think we have like everything that we need right now to have a real consumer app moment with DeFi and Ethereum in general. And I think we overlook a lot of the ways to address like user concerns. Like we definitely over push on documentation, technical concepts and everything. But if we just give them an app, put it in their hands and it works, like it does the job. So I'm super excited about apps that have come out, like especially on like the Vault side and DeFi side. So Aave app and also Superform, and just like you kind of see it as like a high yield account, right? And you don't really need to look into things if you don't really care or not. Like it just shows you your balance, it shows it's going up, shows where it's coming from, and that's it. And I think that's super exciting. And then on the asset manager side is like have better vault technology that acts like a platform, like how they currently manage their assets and their users, so that they can just like do it themselves and translate it to their clients, whether it's like a report or not.
Yeah, I'm just wondering why not every layer 2 or existing layer 2 just does some sort of like high level vault that just kind of deposits onto big lending markets. I think we're also going to be seeing a lot of off-chain capital that's sitting on exchanges, custodians, making its way onto Aave and other DeFi protocols. But I think from the conversations that I've had, for example, it's just like there's so many avenues for yield, right? But there are like a few like blue chip safe venues. Should we just like vaultify everything and then just make it simple for big institutions, custodians, or like how would you kind of see that?
Yes, yeah, I definitely think ultimately, all assets will end up on chain, right? That's sort of all why we're sitting here. And I think a vault is a wonderful tool to do it. I still think that right now there's a lot of infrastructure and a lot of players that are sort of working on the distribution side, right? Like getting all the deposits coming in, which is super important. And at the same time, I think it's really important that there's players that focus on generating the yield, right? Which is then really where Maple is strong. But I certainly think that vaults, because of sort of the isolation of risk, I think is a really powerful primitive that institutions really like. It's actually a question that I often get is, can we just get access to only Bitcoin-backed loans, right, and just lend into that, for example? And vaults is a wonderful structure to do that in.
And like sorry, go ahead, Charles.
I mean, I would just argue that I don't think there's enough yield, like sources at least, because I mean, if you look at most of the yield sources on Ethereum or these major blockchains is that it comes from off-chain sources, right? And like that's a huge dependency. But like I think we need to focus a bit more on like what can these blockchains actually create in terms of yield sources, like consensus, like staking and all that value. Because there's a huge amount of stuff that hasn't really been tapped in on these blockchains. Like the ETH burn mechanism kind of combines 3-ish things, right? There's like consensus, and then there's storage and compute. And that all factors into like holding ETH or whatever. But those two markets outside of consensus and staking haven't really been financialized. So like you can look at storage, like maybe it could be commoditized, like you could sell storage space. It just hasn't really developed. So like if we can think about more like yield sources on-chain instead of like bringing everything from off-chain, which I think is also really good too, but it kind of diversifies the options. That would be amazing to see and like have more people focus on that. But yeah, for the RWA side as well, I think having plenty of more like yield assets to essentially borrow from and do all these mechanisms is great. But like the only real yield from DeFi is actually from lending and borrowing, and then like LPing on AMMs or and what's not.
And I think maybe that's like the other great aspect of vaults is that it's like the aspect of hedging across like different markets, across different layer 2s. I mean, obviously like on the Mellow vaults, right? So like we're probably on 2 chains right now, spread across different lending markets. But I still think that there are some risks, right? So like, let's say, for example, there's fluctuations of rates. There are certain asset managers that can sort of like mitigate that in a more responsible manner. How do you guys think about monitoring tools, for example, for asset managers? Do you have some preferred tools that you use within your own organizations?
Yeah, we use a lot of tools. I mean, I think the main one is Hypernative, like to monitor everything on chain. Incredible team, by the way, huge recommendation. And they just give automatic alerts, but also, you can also automate actions based upon certain alerts, right? Certain things that are happening. And even, with the incident a week ago, right? Like we're instantly alerted, like the whole team was online. you can take immediate action if you need to, right? So I think that would resolve. So yeah, I think that's extremely important. And we also see in all the funds that we work with, they have similar tooling. And of course, you got your institutional wallets and making sure you have your proper policy set up, whitelisting of addresses, things like that, which also helps a lot, right? Especially now with AI, and there's a lot more security risk, right, across the board. So yeah, at Maple, we're sort of looking at that and making sure we're at the bleeding edge of adopting all of these tools.
Yeah, I agree with him.
Okay, that was a short answer. All right, I think we're running out of time, so let's do a shill moment. Maybe we can start with Charles with EF. Any alpha?
I mean, we're actively looking at more DeFi support, whether it's from like encouraging teams and supporting them on research from like social media and content and research there, and also looking more into DeFi protocols from like the Treasury ecosystem support side, and expanding from there. Don't really have alpha to share. I mean, I think like I mentioned, the untapped areas of yield on Ethereum are super exciting, and I'd love to talk with any team who's like looking more into those areas. And yeah, I mean, keen to hear Maple's alpha.
Yeah, we should talk first of all what the Treasury said. Yeah, and then I would say things we're really excited about is number one, euro yield this year. So I think that's going to become big, as especially Europeans. They love yield, right? Even more than the sort of like dollar-based holders. And then also, I think the RWAs is just super interesting, right? Like GPU financing solar panels, right? Like all of these different categories, I think are going to become very big over time. I mean, there's some challenges to be sorted out in regards to duration and quality and things like that. But I think those things will need to be solved to truly scale another 10 or 100x, right? And sort of be able to get off the capital on chain. So at Maple, we're watching, right? We definitely don't want to be the first mover, but we definitely want to make sure that if there's opportunities that really make sense, like we'll jump on them and we'll scale them into the billions. So that's sort of what we're excited about this year. So I think euro yield, RWAs, and then sort of like all these fintechs and neobanks entering the space. Like that's really going to be a big wave of new capital coming in. And yeah, Maple being one of the few places that can take scale. I think we will be the beneficiary of many of those flows.
Yeah, plus one, I want to see a lot more non-USD stablecoins.
Yeah. Well, USDT was just listed on Aave, right? The USDT syrup. So yeah, use Aave. All right. Thank you, everyone.
Thanks, everyone.